afternoon, everyone, and welcome to Stock Market Today, and happy Friday. You have Alyssa Corum here and Ed Carson. Now, of course, on Fridays, we go a little bit more in depth on the market technicals. So we're going to take a look at the NASDAQ on some different time frames, as well as the S&P 500 and check in on the Russell 2000 as well. But we do want to also check in on a couple of interesting stocks, Ed. So if you could kick it off, we saw the NASDAQ closing the week with a gain of about 0.4% on Friday. So continuing to see some support at that 21-day line.
Yeah, it's nice action here. It was nice because we were definitely, it was coming down, and it just wasn't looking so great, especially, Thursday when we were undercutting here. All of a sudden, the 50-day line was starting to look more prevalent. A lot of breakouts were failing. Leading stocks like Apple and Amazon, they're falling through the 50-day lines. They still are down below those. So it was starting to look a little weak. And this is where you can make money, especially this is where you make money. You don't make money when the market is going down. I mean, yes, some stocks will rise. There'll be good news, this or that, but you're not going to make money if there's not the trend isn't your friend. And in the very short term, this was not great. So what we did here is we stopped the bleeding. This was positive action, definitely the best day of the week. And but we still don't know decisively. We haven't really broken above. Sure, you'd like to get above here, or even just more of a trend line, really break above this.
Mm-hmm. Exactly. And, I think this week tested a lot of investors' patience, especially those who at the end of last week saw, all right, we have this handle here. Let's see if we can move higher from that and start seeing some actionable stocks across the board. But really what we saw was, with some exceptions, a lot of stocks, of course, as you could imagine with the market action, just continuing to form those handles.
Yeah, I mean, everybody was like after last week, okay, yeah, sure, we pulled back, but we got handles, we're going to go, you're right. And then we kept coming down. And that sometimes happens. Handles don't mean that there's going to be this huge breakout. I mean, it just means that there's some positive signs, but you want to wait for the real move. And, the market pulling back for a few days, no big deal. As if it just keeps on happening and happening, then that's just going to weigh on your portfolio, weigh on your stocks. So we'll just have to see how that goes. Right now, it's nice to see this action. We haven't, the stock market really hasn't shown its cards where it's going to go. And obviously we'll be talking more about what's going to be happening in the coming weeks, but here's a look at the weekly chart.
Yeah, go ahead. What are you seeing here? Obviously, it was another down week, but not as bad as it could have been.
Yeah, you can see how this kind of way down here, and we definitely got much higher. Definitely close to the upper half of the range. So stop the bleeding. We've pulled back in a couple of weeks, and in this perspective, it's nothing as violent as this. We've still held on to most of the gains from up here. So, and if you look at the context of this regression line, which sort of serves as almost like a channel line, we're back in that whole range. This all looks sort of normal so far. We're not breaking anything significantly. So it's still positive, but if you want to do more, you want to see something, you want to see the market really show real positive action from here.
Yeah, that's right. But there were some interesting stocks underneath the surface. So let's check in on Taiwan Semi in the semiconductor group, of course, ticker TSM. So we saw a pullback to that 50-day line and a really nice rebound from that level. And now it's been trading quite tightly and hasn't really given up much ground, where a lot of other stocks have been pulling back with the market.
Yeah, as we were talking about on IBD Live, it was sort of like unfortunate that it broke out on this day because it was right here when the market sold off again. I mean, it already sold off in September, the first half of the month, but then it just went down the new leg. And so Taiwan Semi's breakout failed. If it had just waited one more day, the breakout wouldn't have happened. And then maybe you would have had this breakout and it would look perfect. But that's not what happened. So this whole area was messy. You could have tried to hold on to it. You could have bought somewhere in here. But, we're seeing a lot of stocks, and this is one of them that's sort of consolidating just at the edge of buy zone, whether, of an old buy zone, and maybe providing a new opportunity to break out. So that's something to be looking for. Stocks that have held up in this last couple of weeks, it's traded really tightly here.
Yeah, that's right. And Taiwan Semi, no doubt, is a stock with very strong fundamentals as well. And you have earnings out of the way, which we know it's going to be a really big week for earnings next week. A lot of stocks issuing their reports. So, but earnings, as we've said, can be a crapshoot. So you have that risk kind of off the table. Although other headlines and things can
There's a
have an
lot going
impact,
on.
but
There's a lot
there's a
going on.
lot going on right now. But that is a great one for the watch list, as you mentioned, Ed. And speaking of a stock that is reporting earnings next week on our radar, that would be Microsoft, ticker MSFT, working on its own cup with handle base with earnings due on the 27th. And with this pullback in the handle, we've seen Microsoft finding support around that 21-day line and the 50-day line, which are very close to one another.
Yeah, I mean, the relative strength line hasn't been great in the last few months, but he's obviously been a real strong leader. It's a long-term leader, so it's been great over the last several years. This has done better than most of those big mega caps like Amazon, Apple, or other stocks like Adobe that have pulled back and maybe really struggled with their 50-day line. This one traded pretty tightly. It's had 4 straight days. I mean, most of those little gains are nothing, but they were up. And I think so. If it was something like this with long-term leaders, you don't have to necessarily buy it off of the breakout. Sometimes the best time is off the 50-day line.
But again, we have earnings around the corner. So you want to make sure you have enough cushion heading into that report. So that's the trick here with Microsoft. So for those who don't have a cushion, maybe it does hang around here a little bit longer until the report, and then that's the catalyst.
Yeah, I think what you might want to do is that with a lot of these stocks, long-term leaders, and especially with earnings, wait for earnings in this situation. But if it can get above this kind of trend line here, this brown trend line, that would suggest it's breaking that trend line in the handle, still be pretty close to the 50-day and the 10-week line. And if stocks like Microsoft are doing this, then the NASDAQ and the S&P are going to be doing that too, in all likelihood. I mean, it's always possible Microsoft will be a lone wolf and nobody else joins them, but just to look at the S&P 500.
That's right.
The S&P 500, that one was maybe looking not quite as steep as the NASDAQ. The NASDAQ is pretty steep, but it's this kind of thing. It's not, even the S&P hasn't really broken that trend line. I mean, maybe it's for the best. We still have stimulus, we still have the election, we have earnings, we have the presidential election, coronavirus vaccine news. There's a long list.
That's right. And we also want to check in on small caps. So the Russell 2000 up about 0.5% today. It looks like the decline in this handle like action isn't quite as steep.
No, and Thursday was a really strong day for this. Ken Shreve, he's always pointing this out, like, look at the Russell. The small caps are doing really well. And he's right. That's interesting. So it may not be that the Amazons and Apples are the leaders of this next round. I mean, they may do fine, but you shouldn't disregard small caps. I mean, if you have $5,000 and you put it in a small cap, I mean, if that thing doubles or triples, it doesn't matter how big the company is, it's big for your portfolio.
Yeah, that's right. And Ed, if you want to go back to either the NASDAQ or QQQ so we can kind of put together some final thoughts here and discuss the game plan for investors for the week ahead with all of the things on the table next week that you mentioned. So a lot could happen. We have a ton of earnings reports. So potential for big moves either which way at a very pivotal point on this chart here, with the NASDAQ being so close to that 50-day.
Yeah, I mean, I think that's one of the things is like first just, do your usual steps of analyze your stocks. You may have needed to cut some stocks or pare some stocks in this past week because, you were starting to lose money on things, or maybe things were round tripping. So you might have cut your exposure that way, but still now look at what the holdings you do have now, see how they're doing, grade them and see, well, which ones do I want to hold or not? But then when you've done all of that and then you've looked through your watch list, and there's a lot of interesting charts, you just need that little push, with the market. But then what you want to do, I think, is what you want to do is probably nothing. I mean, it's like, aside from maybe penny stock, you maybe don't want to get too exposed. You want to probably wait for that market to make a clear, decisive move to the upside, before you start stepping up your exposure again.
Mm-hmm. Yeah, I think also if you are holding some stocks that have, one of these key earnings reports
Yeah.
next week, how much cushion do you have? This is something that we talk about a lot on IBD Live. You don't want to be heading into an earnings report. Tesla, a good example, if of a recent buy point that wasn't fruitful, and then the stock reacting negatively to that report. So you would have been down if you would have bought at that last area. You would have been down heading into the report, and it did close well off of the lows today, but not really great reaction in the yesterday's session and today in the aftermath of that report. So be prepared. How much risk are you willing to put out there in terms of having a stock move against you in the wake of its earnings report?
In a stock like Tesla, if you bought it in one of these other proper buy points well back, this is
Right.
all not a big deal. I mean, you look on a weekly chart, hey, it's holding support around the 10-week line. This is all sort of fairly normal. And that's with a lot of stocks. But if you bought something new, yes, heading into earnings, because yes, you may have a stock that goes up 20%, but you're going to be burned other times. I mean, there's going to be stocks that are really big losers. This was okay. This is not the
Mm-hmm.
worst. There can be some really big losers out there. And so you just have to be ready for that. And given that the market has a lot of uncertainties, you just don't know how it's going to go. The earnings cushion is just very important. Just try to
Mm-hmm.
wait for the market to be decisive. Don't buy right ahead of earnings. Be considerate whether or not you want to sell or sell some of the stocks, heading into earnings, especially if you don't
Right.
have much cushion. And,
And have that watch list ready.
yes,
Microsoft, that we could see earnings as a catalyst for a move higher on earnings, and we have a lot of strategies for how to buy stocks if they do see that. There's obviously no guarantee, but you want to be ready if you do see an earnings gap on a report.
in a couple of days, this whole market could look very good. I mean, it could look very bad too,
Yep.
but it would not take, we are at a point where it wouldn't take much when all of a sudden everything would start looking great. But it could go the other way as well. So just wait that little bit. When we have these moments, these are moments when you can make lots of money. There's not a whole lot there wasn't money to be made here. There's money to be lost here, money to be made here. And this has been, probably losing a little bit of money. So the trend is your friend. Make the trend your friend, and that's the way you'll be
Mm-hmm.
a successful investor.
That's right. All right, everyone. Thank you so much for watching. We hope you enjoyed this analysis, and you can get more analysis like this in an even more extended format, believe it or not, over on IBD Live. That's our daily morning live stream. Our experts are sharing their screens and talking about market conditions and actionable stocks all in real time, talking to you about what we're thinking in terms of holding stocks into earnings, or a stock that is actionable with 6 days to go before its earnings report. How are we handling that? And with the election right around the corner, what are we doing with our portfolios? How much are we invested? How much do we have in cash? How much are we hedged? All of these great questions and answers to those questions and more. And a great analysis from Ed as well on Tesla and beyond.
Even
We
beyond.
always... There's always something fun to talk about. We really enjoy it. And next week, wow, I have a feeling it's going to be a jam-packed one.
Oh boy, it's going to be crazy just for the whole week, and so it should be a lot of fun. So you're right, absolutely right.
All right. So make sure to check that out at investors.com/IBD Live. And we'll see you right back here on this show Monday afternoon. Have a great weekend.